So what did you do to make Bank of America now the largest consumer bank in the United States?
Well, basically, it was to pare the company back to what made it great.
You had to go call a man named Warren Buffett.
Warren called us. My teammates went back to work the next day saying the smartest investor in the world, put $5 billion overnight in this company.
So if the President of the United States called you someday and said, the country needs you to be Secretary, Treasurer, Chairman of the Fed, you would say?
Call Mr. Rubenstein.
Would you fix your tie, please?
Well, people wouldn't recognize me if my tie was fixed, but okay. Just leave it this way. All right. I don't consider myself a journalist, and nobody else would consider myself a journalist. I began to take on the life of being an interviewer, even though I have a day job running a private equity firm. How do you define leadership? What is it that makes somebody tick? Let's talk about your career at Bank of America and how you rose up and how you actually became the CEO, because I think it's quite interesting. So to go back to your background, you're from Ohio?
Yes.
And your father was a chemist?
My father was a chemist, yeah.
And was it DuPont? Or?
DuPont, yeah.
Okay, so you are the 6th of 8 children.
Right.
And when you have 8 children, I guess you share a lot and so forth?
Well, you make sure you have to be very aggressive of at least getting your share, let's say that.
Okay. So you went to Brown University, and you were the co-captain of the rugby team.
Right.
So rugby is a tough sport. I assume that's not as tough as banking, or banking tougher than rugby?
Yeah, there's nothing more powerful to see one of those scrums push. And I was never in there because I wasn't big enough, but to direct that, which was one of my roles I played on the team, it's a fantastic, teamwork game, and I think that's the consistent. You learn the teamwork. All 15 players participate fully in rugby. It's a different kind of game.
Did you ever break any bones or anything?
I got knocked out once by my own teammate, which irritated me because I was ready to score, and a guy kicked me in the head on my way to the goal.
Okay. So you graduated and you went to law school at Notre Dame?
Correct, yeah. Played rugby there, too.
You played rugby there, too. So where were you more of a star, at Notre Dame or at Brown?
I don't know where I was a star, but we had fun at Notre Dame playing, too.
You then went back to Rhode Island, practiced law.
Yep.
And you were a corporate lawyer, or? Okay.
Corporate securities, M&A, private equity deals.
The highest calling of mankind, private equity, right? So,
it's interesting because one of the reasons why I quit being a lawyer was I had worked with our private equity firm, the private equity firm the company owned called Fleet Equity, which became Nautic now, and I structured deals with them, and that's what sort of led the CEO at the time, Terry Murray, saying, come work with us, quit being a lawyer outside, and I went to work with
okay, so then Fleet was an acquisitive bank, and it ultimately did a merger with Bank Boston, is that right? Then you stayed with the combined company, and then when the CEO of Bank Boston took over, Chad Gifford, he ultimately decided the bank, even the combined bank, wasn't big enough.
Correct.
And so he ultimately discussed selling it to a number of other people, and ultimately it was bought by Bank of America, is that right?
Right, and that goes to the scale of banking and what you could achieve. It was ultimately the first nationwide bank, and that's something that we have that no one else has right now.
When Bank of America came in, what was your job in the new bank company?
I had the wealth management businesses, so Columbia Asset Management, the brokerage business, the private banking business. So I had a group of businesses called GWIM, most people call it Global Wealth Investment Management.
And then for a while you became the general counsel of the entire Bank of America?
For 40 days.
40 days.
Yeah.
And
from December of 2008 to January of 2009, so it was 40 days.
40 days and 40 nights, and was there a flood or anything? Nothing.
Well, there was the Merrill transaction and a few other things. Okay. So the second round of TARP and a few other gems, but.
Okay. By that time, the United States was in a middle of a financial crisis. All banks were in trouble, I think it's fair to say. Bank of America was doing a favor, I guess, for the United States government when it was told it should buy Merrill Lynch. Is that right?
There was a scramble going on to try to stabilize the firms that were less stable. J.P. Morgan, Bear Stearns, ourselves with Merrill Lynch, et cetera. And we couldn't stabilize Lehman, and we even looked at it as a company.
But at one point, they were looking. The CEO of Bank of America was leaving,
yep.
And they needed to get a new CEO. Right. And how did they pick you? You were the general counsel.
At that time, I wasn't. So I was general counsel for a short period of time. Then after that, I had to run I had the brokerage business, the commercial banking business, and the investment banking business. But I couldn't keep a job for a while there, let's just say that. I had probably 5 jobs in a year, but because largely we were doing deals and things were shifted around and it was a little interesting. But at the end of the day, in the fall, the late summer, early fall of 2009, Ken Lewis, the CEO, told the board he wanted to leave at year end, and they went through a search process. It was something I've told our board I'll never leave you in the position to have to do. So I owe them a successor. At all times, not only now, but also sometime in the future. And it was a relatively difficult process for all involved. And then at the mid-December, they finally concluded that I'd be CEO, and I've been CEO since January 1st to 10.
So since you've now been running it for almost 10 years, the market capitalization is up about 54%. Stock price is up about 76%. So what did you do that made these events happen and make Bank of America now the largest consumer bank in the United States?
Well, it was a fairly straightforward thing, and there was some additive stuff that made it a little more interesting. But basically, it was to pare the company back to what made it great. And what makes it great is the 8 lines of business and the simplicity of that. And so we got rid of about 40 different units that we didn't need. We got out of businesses like outside the United States wealth management business, which we didn't make any money on. The issue that got in the middle of that made it more interesting, I said, was that the defaults and mortgages kept building. And so taking care of that issue was unique, and the question was you just had to take that stuff and get it away. And the vision was to have everything a customer or company or an institutional investor needs, but keep it to that and not get into stray business. Like we have $70 billion of funded private equity investments when I took over. We have probably less than $1 billion now or $2 billion.
You can't have too many funded private equity
But that's your
investments,
business.
in my view. But,
that's your business. Our job is to help you do it, not to be competitive. And those were major changes.
Before you were the CEO, the bank made an investment in Countrywide, and then they made an acquisition of Countrywide, and ultimately it turned out to cost the bank maybe $50 billion or something like that. So maybe one of the worst acquisitions in the financial services world for quite some time. So they got in trouble countrywide because of subprime mortgages, among other problems. Are you making a lot of subprime mortgages today? Is the bank doing that?
The reality is what we were 20% of the mortgage market, of which about 15% of it was done through other people, brokers and correspondents. We don't do any of that anymore. So the only way a person gets a mortgage loan at Bank of America is sitting in front of a Bank of America teammate or digitally directly with us. We don't buy mortgages from other people. That's left us with about 5% of the market, and so it's a much more stable environment.
Okay. Today the bank's future looks very strong, but at all times it wasn't so wonderful, and at one point during the crisis the bank needed some more money, and you had to go call a man named Warren Buffett. Was that easy to make that call? And did he say anything you want, any terms you want is fine, or how did that work?
No, Warren called us.
Oh, he did?
And so
Okay.
he called, and this story I've heard from Warren, but as far as I know, he called and he got into the call centers and asked to speak to me. And of course, they don't transfer everybody that calls the call centers to the CEO's line.
So how did he get a hold of you?
And so he found one of our investment bankers. They worked with the CFO at Berkshire, and they called and I talked to him. And he basically said, Brian, I want to make an investment in your company. And I said to him, we don't need the capital. He said, I know, that's why I'm calling. You need stability, you need an imprimatur, and the capital will do you good. And that was in 2011 when the world was kind of interesting because, remember, the government was almost going to default. You had real uncertainty about this, the litigation risk around the industry, mortgage industry, and he put the money in. And from that day forward, the company, my teammates went back to work the next day saying the smartest investor in the world, put $5 billion overnight in this company. He literally called me. I talked to him first time in my life on Monday at 11, and we had the agreement signed on Tuesday by 8 or 9 a.m., and we had the money by Thursday. And so he does that, and so we took. Now the interesting thing is, if you're a common shareholder and bought that day, you would have fared as well as he did. It's just you had to have the courage, and he had $5 billion at a time when other people didn't have it.
So he bought stock at a time when the stock was less than half of where it is now, I assume.
Yeah, it was. His conversion price was $7.14. That was like 15-20% up.
Okay, so if I had some extra money today and I wanted to buy stock in a bank, should I buy your bank stock and Bank of America? Would I do well?
You would do well. You would do well. I mean, we have the best franchise across all the businesses and financial services in the largest economy in the world, the United States, and around the world. We have one of the top 2 or 3 franchises dealing with the the company's a global company. So what more do you want to invest in?
Do you think the DoddFrank legislation is working, or would you modify it a bit?
The capital, liquidity, most importantly the stress test, those regimes are critical, and the reason why the U.S. banking system is strong and active and growing.
During the Great Recession, you spent a lot of time in Washington, more than probably you wanted to, and you've very often testified and so forth. Do you think that the attitude towards banks today in Washington is more favorable than it was when the Great Recession was going on?
I think the attitude towards banks generally is more favorable because, in the end of the day, America's prospered, the economy's growing, the unemployment's low, and that's a better backdrop than severe delinquency in homes and housing and the foreclosures that were going on and the unemployment at 10%. Our brand's at an all-time high. Our customer service scores are at an all-time high. Our growth is actually exceeding the industry, and so those are all very good things for a company. But that was built through a lot of tactics we took, but the general atmosphere is better, largely because people see that we're out there trying to help.
I think it's fair to say that the banks were beaten up by the regulators and Congress, and ultimately the Dodd-Frank legislation was passed. Do you think the Dodd-Frank legislation is working, or would you modify it a bit?
The banking industry self-insures itself. And so if you're actually an insured depository institution with insured deposits, it's a cooperative. So when a bank fails, we pay 15% of it. And so we have a high interest in having the safest industry. What happens in times is you see the activities leak outside the industry. And that's what really the problem was. So most of the major issues were companies that weren't covered by the core regulatory umbrella. Dodd-Frank changed that. That is a very good thing because now they have purview over the whole industry. Now we still struggle. Half the mortgage business is not in the banking system today. And when it was not before, that gave rise to Countrywide and some other gems. So, I think overall Dodd-Frank is corrected a lot of the issues. The question is, underneath it, there's pieces like the Volcker Rule, which people talk about, that sort of swung in a direction you're saying, I don't think that's what they were trying to do, and we're trying to get them more rational. But the capital, liquidity, most importantly the stress test, those regimes are critical, and the reason why the U.S. banking system is strong and active and growing and supporting the economy, and other banking systems aren't, because we got to it.
Today, there are four big banks in the United States: Citicorp, J.P. Morgan, Wells Fargo, and Bank of America. Do you think that's a good thing to have only four big banks that are based in the United States, or do you think it's working okay?
I think it works well, but I think there's a large amount of the industry is in the hands of a lot of there's 5,000 banks and there's community banks. So you really have a much more varied financial industry. And so one of the things that makes our industry strong is the variety of participants. We have the largest market share, along with those colleagues. But if you actually look at us as a percentage of the GDP relative to other countries, this is completely unconsolidated business. We have the largest retail share, and we think we're about 15%. If we were Coke or Pepsi, we think that's not very good market share, right? So there's a lot of room to grow here still.
What percentage of your profits or revenues are from outside the United States? Is it a large percentage?
About 15 to 20%.
And are you reasonably happy with that, or you think that where your expansion can come?
Well, we're expanding outside the United States, and so we have a business which is in all the major trading venues, which is doing capital markets and trading for the big asset managers and other firms. And we have a company that does corporate and commercial banking, investment banking, and treasury services around the world. And we're investing tremendously in those by adding people. It doesn't mean you have to make acquisitions. You're just adding more and more people and the opportunities, in whether it's in Asia or whether it's Latin America, whether it's Middle East or wherever, Europe, et cetera. We can grow because basically the connectivity of the 2,000 or 3,000 largest companies, and then secondly, the connectivity of mid-sized U.S. companies, which we're the largest provider of services to around the world, and the supply chains and everything. It needs people like us, and we are happy to do it to help them transact and engage in trade and import, export, all that stuff, and it's a great business.
In the old days, 20 years ago or so, if I wanted to get some cash, I would take out my checkbook, I'd go to a bank, I'd write out a check, and they probably would cash it if they could make sure I had enough money in the account. Do you really need banks, physical banks these days? How many people actually walk in and cash checks that way?
The numbers are surprisingly
How many
large.
physical facilities do you actually have?
We have 4,300 branches today.
4,300.
At the highest point, we were probably 6,100. But today, you have to be high touch and high tech. In those branches, over the next 24 hours, about 800,000 people will come in and transact. And so, but during a course of last quarter, meaning second quarter, I think we had 1.4 billion consumer interactions, and 1.3 of them were digital.
So people my age and my color hair, are they the ones that are going into the banking branches? And are the people doing online banking, are they mostly younger than me by a lot?
I'd say a decade ago, the cohort would have been more age determined. Now it's not. Now,
Okay.
We had a 100-year-old person sign up for mobile banking, which is optimism.
They get a discount if you're 100 years old?
I guess it's free, so it's hard to give it away. But I think if you look, so we do a great job on millennials. So we open accounts at twice the rate of the millennial population, so we're gaining share of millennials. But on the other hand, we also hold a lot of money and transact a lot with people our age.
So the most common dollar currency that you use, is that the $100 bill? Is that the most frequently?
No, the 20s are still the
20s
most
are?
common. Yeah.
Okay, so what about cryptocurrencies?
Yeah.
Are you a believer that they will replace US dollar currencies or just supplement them?
Well, if you separate two different thought processes, one is the moving money digitally. 55% of all the payments by those consumers at $3 trillion moves digitally today. The United States is still a cash society. So what you're trying to do is trying to move currency out. An anonymous currency is a separate question. And so that doesn't work so well. But the idea of digitizing cash, we spend about $5 billion to move cash, coin, and currency around the company and checks. There's no one more highly interested in that, and we're driving that down. It's just that Americans still use it, and we'll be there to help.
I read that another bank in the United States, J.P. Morgan, you've heard of them?
Yep.
That they were thinking of having their own kind of cryptocurrency. Is that true, and are you doing something similar?
We have, so you get the blockchain as sort of the connection between that. We have, I think, 45 patents issued on blockchain already. We have another 45 in process. So we believe in the idea of distributed ledger technology and ways to move money, and the uses of it around trade, where you got to use a lot of information and money at the same time, and documents. Those are good uses for it. Whether it's, I don't know whether I'd call that a cryptocurrency. I'd call it's still US dollars. It's still fiat currency distributed through electronically. That's going to happen.
So if I'm a college student watching this discussion and I'm getting ready for a Bank of America interview, what should I do? I should dress appropriately, right?
I'd make sure you demonstrate curiosity. I'd make sure you demonstrate that you really want to help people.
So I don't think the people watching this show are generally bank robbers, but for those bank robbers that might have tuned in, is it easy to go to a bank today, put up a gun, and get some cash out and escape, or is that harder than ever?
It's harder than ever.
Because
it's just not a very fruitful exercise.
Are a lot of people doing that anymore, or that's basically...
It doesn't happen very often.
Doesn't happen.
I mean, it still happens. You catch the people. That's the deterrent. And we have our teammates. Once I went to, we have cameras that work all around the firm and in branches to record things. And I went to go see it, and they were going to show me what a bank robbery looked like, and there actually was a robbery at that time, a live robbery. And there's nothing worse than seeing someone pull out a gun and point it at one of your teammates. And so, we do everything we can to make ourselves, less attractive to that activity, and the team's done a good job.
Now, you've used the word teammates a few times. So a teammate is like an employee or a colleague. Why do you use the word teammate?
Because we're out in competition to knock the crap out of everybody else, and that's what teammates help you do.
How is the diversity among your teammates?
We're half women, half men.
Okay, and minorities is?
Representative at population levels for the various ethnic breakdowns. We've got work to do in terms of seniority in some like the traditional financial advisor work in terms of women. There's areas we got to work on. We know those. We're driving at them, but we measure it, very carefully. But 6 board members are women, and then half my management team's women, basically. And so from top to bottom, we're pretty well represented.
Half your management team is women.
Yeah.
Are they better than the men?
I think you'd have to ask them. So.
Okay. So today, if I wanted to graduate from college and, let's say, get a good job, Why should I want to go to a bank? Is a bank a good career? And do you think that young people graduating from college or business schools are coming in greater numbers or lesser numbers to banks?
Well, we bring in, into the core training program, we bring in 1,000 plus kids for the summer. We bring in 1,400 for the summer. We hire about 1,000 a year, just in the core training program, markets, investment banking, commercial banking. And then if you go more broadly in the company, we hire about 4,500 college graduates, recent college graduates a year in the branch system and everything. And so there's no doubt that people want to come work for us. And it's a great career. It's a chance to help people. People come to work for our company because they want to help.
You have 3 children. Do you recommend banking to or financial services to your own children?
2 of them work in finance, and they like it. One's been in for 5 years now. The other one 3 years, and they work at competitors because they can't work for our company, and they like it.
So if I'm a college student watching this discussion and I'm getting ready for a Bank of America interview, what should I do? I should dress appropriately, right?
Yep.
And cut my hair a little bit, maybe?
In my mind, it's the same thing. I'd make sure you demonstrate curiosity. I'd make sure you demonstrate, that you really want to help people.
The Bank of America has a very large charitable undertaking and effort, and you have a good-sized team doing it. What are your areas of focus, and how important is that to the Bank of America?
There's a pure charity we work. We have, it's about $250 million a year of giving. There is the community development, low and moderate income development we work, which is about $4.5 billion to go into low and moderate income housing and development in areas. And then there's a volunteer, which is 2 million hours a year on top of that. And then there's employee giving on top of that. And so you're working all these things. And so the areas we work in are largely around economic development, environmental work. We have a $300 billion environmental commitment that we just renewed. We've done about $125 billion so far. Some
people say CEOs, because of their prominence, should take more public positions on issues of public policy. Do you agree with that, or do you try to stay out of public policy or public controversy?
I think there's 2 parts to that question now. We firmly believe that we have to both produce great profits and returns for our shareholders, and we have to deliver what society needs. Because as a bank, we're only going to be successful societies. Our decision about guns and things like that, which we made 2 years ago now, or a year and a half ago, whatever it was driven by the fact at the time we had well over 100 people that were in the venues where these horrible tragedies were taking place, inside the Post nightclub, in Las Vegas. And so the teammates are saying, we need to do something here. So what are the leadership secrets? Is it hard work, intelligence, luck, persistence? What is it that you would say enabled you to rise to the top, and what would you say that somebody who's looking at you as a role model should look at you and say, this is what I did to get where I am? Well, I think it's all those things, and I'll let the intelligence be decided by other people, but it's all those things that you have to work hard, you have to find out what's important in the company, you have to and be successful in the areas that have impact. But the number one thing when I talk to young teammates is be curious and keep learning. Now, you've been the CEO of Bank of America for roughly almost 10 years now. At some point, would you like to come to Washington and be Secretary of Treasury, Chairman of the Federal Reserve, Member of Congress, or some other position in the government? I think I have the honor of having one of the best jobs that you can have, so I'm completely happy, and I plan to do as long as my board will have me. So if the President of the United States called you someday and said, the country needs you to be Secretary of Treasury or Chairman of the Fed, you would say? Call Mr. Rubenstein. Well, I think that call is unlikely to happen.